Welcome to Personal Finance with George. Today we're going to answer the question, what to invest in. So at the moment we're seeing a lot of volatility both internationally and domestically, especially in Australia with the current political landscape, with a new Prime Minister and a new political party being put in place. Also seeing how the effects of the policies and moving towards a greener Australia will take into effect over the years to come, given that Australia has been solely reliant on coal and iron ore explorations and exporting them abroad as well. That has been one of our largest gross domestic products that we export. So we're going to be looking at this space very, very closely and see how the particular companies in that sector are going to react to this type of noise in their landscape as well. So we'll be looking at that. So that's number one. Also, we've had a lot of people going, hey, what do I invest in? We're seeing a lot of volatility, a lot of risk. We're seeing markets dump, especially in the tech sector over in the US. We've seen 8% drops just since April. So we are in a very rocky ship. But the good thing is in Australia, we have AAA banking regulation, and we will see our banks flourish during this time period as well, because they have strict lending requirements. So I feel that even though the market is starting to taper off from that price premium that we have seen over the last 6 to 12 months, we will see a strong property market continue in Australia, as we generally, most of us live on the coastlines of Australia as well. Even though we're on a massive continent, I believe that a lot more people are going to be moving to this prosperous country as well. So watch that space. So an investment decision doesn't necessarily mean go buy this particular asset. An investment decision could also be to not do anything during these volatile times as well. And we need to take into account our time frames and our goals. We always got to work from our goal and create the portfolio and the investment vehicle to hit that particular goal. So if you were a first home buyer, you would go, okay, I want to buy a home in the next 1 to 2 years. Well, then you would create a portfolio that will help you maximize the chances and probability of hitting that goal. But in this current market, if you were to go buy a property in the next 2 years, you don't want to be in extremely volatile assets like Australian international shares at the moment, because if we do see a correction in the market of 15-20%, then your capital savings towards that would be impacted significantly as well. So by not investing into growth assets, sometimes are the way forward for most investors, if they've got a short-term horizon for that particular goal. And it all comes down to recovery time period. If it's a long-term goal, the market can crash 3, 4, 5 times by the time you retire if your goal is in the next 30 years. But if the goal has a shorter time horizon, for example 5 years, then you would mitigate that risk of that particular portfolio by reducing those growth assets that have those high volatilities. So first choose the goal, then align the time frame, and then you create a portfolio or select an asset which helps you meet that particular goal. So that is the most imperative process. Step 1, choose the goal. Step 2, allocate the time frame for risk but also performance of that particular asset. And then number 3, create the portfolio around that. So talk to your advisors and stockbrokers and mortgage brokers and find the right mix for your personal scenario as well. At the moment, if you have a mortgage, it's good to look at, as interest rates start to rise, by paying down your mortgage. If interest rates go 4 to 5%, then paying down that mortgage of that 4 or 5% is like $1 saved. If you had that money invested in an investment vehicle, any income derived from that investment will also go towards your marginal tax rate. So then you'll have tax implications for that. But by paying down your mortgage, you do not have those implications around income tax around that. So talk to your accountants to find the right investment solution, because $1 saved is also $1 earned. And during these volatile times, we want to be as strong and be opportunity ready to take advantage of investments when they present themselves as well. So these are some little tips to think about and to talk to your investment professionals about finding the right solution for your personal circumstances as well. Thanks for your time, and we'll chat soon.